Hello traders, welcome to this live intraday strategy webinar on SB Trade Desk. Michael Boutros here with you this morning, guys. Good to be here. Graham, Eileen, Medad, Mark, Mir, Permendra. Not gonna get through the whole list, but it's good to be with you guys here this morning. So, lots to talk about. We'll be going through the initial trades from last night's update. Aussie dollar, dollar CAD I was involved in, euro dollar, we got stopped out at break even, so we'll take a look at that. Euro yen, I know that Jamie's been talking about that as well. Huge rebound here. And obviously, we're going to touch on the crude and gold trades as they continue to make headlines. As always, guys, questions, trade setups you want to review, feel free to post them on the message board at any time. Okay, so before we get started, let's take a quick look at what the dollar is doing and what we're heading into here for the U.S. session. So looking at relative performance, you can see the dollar is broadly weaker against most of its major counterparts. Biggest performer on the session, interestingly enough, Aussie dollar up 1.33%. Do keep in mind, guys, for the Aussie, you do have the Aussie employment data on tap tomorrow night. Likely to be a big market mover for the Aussie, so we'll be keeping an eye on that. Sterling with an advance of 1.25%. And Kiwi up 1.18. Biggest loser on the session and continued weakness in the yen is sort of paramount here, with a decline of another 1% today. Puts upside pressure on pound yen, puts upside pressure on euro yen, and certainly we've seen those continue to pan out rather nicely. So we'll take a peek at those two as well. Heading into the U.S. session, there's really not much data on tap. Here's what the equity board looks like. And I just kind of was glancing at this earlier. You know, we are seeing the continued rally over in broader risk assets. Remember, we closed at all-time highs yesterday in the S&P, up another at the futures here ahead of the open. S&P up another 9 handles here, almost 10 handles before the open. So keep that in mind as we continue to see risk stay on a more firmer footing. As far as the economic docket is concerned for today, I wanted to point this out last night, and I kind of just made a quick piece here for you guys. Here are the speakers, the Fed speakers on tap to speak this week. There's not much in the way of data, but there is a ton of Fed speak. We get the Beige Book tomorrow, which remember is going to be the updated assessment of the Fed's 12 districts. But more importantly, these individual comments, you do want to be aware of when they're coming out. Not necessarily going to be trading these per se, but you do want to be mindful of when these guys are speaking. They do have the propensity to charge some volatility. That being said, I also want to take just a quick note and highlight where their stance is so you know what to expect as these commentators come on the wires. You have Fed's Tarullo speaking in Washington today at 9:15 during our webinar. Known dove, right? Bullard, known dove. Later today, you do also get Kashkari. Kashkari is known as a hawk, broadly speaking, from St. Louis there. And then you have Mester later tonight, also known as a hawk. So just keep that in mind as you go through these Fed speeches. The commentary that is expected to come out is sort of highlighted here for you. Deviations from this is what you want to be mindful of. So if Tarullo comes out much more hawkish or less dovish than expected, then you'll see the market start to react in a little bit more in kind as market participants continue to sort of price in the Fed move. As it stands right now, here's what the interest rate probability looks like. We've continued to follow this week in, week out. Just wanted to highlight a couple of different things. You are seeing a slight swell here in the late 2017 expectation, above 50% now for September. Remember, ahead of the non-farm payroll report on Friday, markets had priced out anything above 50% till past December. So you're seeing that those interest rate expectations again being brought in. The dollar index made a run at the monthly high again yesterday and failed before turning over. So for me, the dollar index is putting in a pretty clean weekly and still holding its monthly opening ranges. So certainly we'll be taking a look at that, but we'll update this as needed going through the week. As always, guys, feel free if you need to take a snapshot or if you want to take a snapshot of any of the charts that you see presented here, that camera button's always there for your convenience. How long does each speaker typically take to talk? 15 minutes or so? Yeah, I would say, Eileen, it really is dependent on the forum and where they're speaking. If it's a luncheon or something like this for Mester tonight, I don't expect it to be too long. These other Fed generic speeches typically go between half an hour to 45 minutes. Okay, so just keep that in mind. Permendra, great to see you this morning as well. Graham, same to you, my man. Okay, so this is just the event risk you want to keep on tap. Make sure you keep the sort of your powder dry here and be mindful of these times. But with that being said, let's jump into what's going on in price action right now. Eileen says, oh, okay, good to watch the time slots for that then. Yeah, just keep in mind, if you're in any positions during these times, just be mindful that this is coming out. I wouldn't necessarily say this would deter you from taking a position, but it's just something to be mindful of because you could get a spike in volatility as they're speaking. Okay, so before we jump into last night's updates, just a quick look again at the dollar index. Again, this is the 30-minute, this is the daily. Nothing's really changed on this. We came into the week saying, this is still your major key support, this slope off the lows that we're following. A break sub 11,965 would be needed to really validate more of a reversal in the dollar index. Your key resistance still is up here, okay? Former channel support, now resistance. You also have the 50 line for the current operative structure, and that's going to take you through the monthly and weekly opening ranges at this point. So not really much to sort of gander out here for the dollar index. We'll look for this range to clear out. The risk does remain to the upside while above that median line, but I do think, with what momentum is doing near term here on the daily chart, continuing to hold 60, on a rally, I would be looking for a little bit more of a peak here to sell in the dollar index. Any questions on the Dow Jones FXCM dollar index? Okay, let's jump into the good stuff. Here's what Aussie dollar looked like last night. So, a little bit of a surprise pop here in the Aussie dollar. If you recall from Sunday's update, I was looking for a pullback to get us back on the long side, inevitably looking for that 76.44. Now, obviously, hindsight's 50-50. We did rally through the highs here and overnight, so I didn't get a chance to get involved with the Aussie here, but we're now, again, coming up on some near-term resistance, i.e. last month's high, this 100% extension, and the median line coming off of the lows here. Really critical region near term for the Aussie dollar. Here's what the scalp chart looked like last night. We talked about this in the webinar yesterday on Daily FX. We had completed a 100% two equal legs down, 75.24, and a break above the weekly open. Remember, our bearish invalidation level was the weekly open. And certainly we got that pop last night, rallying right into the top side objectives there. Here's what Aussie dollar looks like now. Okay, so let me just go into the daily chart first. Okay, so again, you didn't even make a run at the lows. There was the break above 75.70, opening range high for the week, 618 retracement. This validates a break to the upside of this descending median line formation. And here's your first sort of initial targets right at the median line / 76.44, which equals 2 legs up from the low that we set in May. So I am looking for some near-term resistance again here for the Aussie. Would I be looking to take the short side scalp? Not necessarily. There are some things here that I'm looking at that could suggest we could get some kickback, but at the end of the day, I'd rather be looking for those pullbacks to get on the long still. Here's the 30-minute looks like, just for reference. So keep in mind here, we're going to look for the close to see if we can top 60 in momentum. But here's what the near-term chart looks like. You're breaking just back below 70 here on the 30-minute. If I zoom this out just to give you some reference, there's that key confluence region that we were looking for. Okay, 76.44, like I said, not only matches the highs that we made previously for June, but also that 100% extension off the lows. You have slope as well coming right into that region. So I do think you're at risk near term for a little bit more of a setback. As far as support is concerned now, sorry about that. As far as support is concerned now, I am looking for initial support to start showing its face near 75.90. We're going to go ahead and bring up the bullish invalidation level at this point to 75.45, which is that initial opening range high we made last month. but also now it's the descending median line formation, former resistance, now support. So on the daily chart, that's this region right here. See where the crosshair is, guys? You can see it on the 30 and the daily. So as long as you stay above this, the trade remains constructive. So the immediate focus heading into the U.S. session is for a possible push higher here for a let back. And then again, on that pull down, we would look for possible reentry first at 75.90, which is the April low day close. On the daily chart here, that spans all the way back to here. Okay, April of last year. Where is it? Yep. And then that last area would be basically former trendline resistance, now support. And that would be the last ditch effort you'd expect to see hold here if Aussie is going to remain on a constructive path. Again, the Aussie data that comes out tomorrow night, here's what that's supposed to look like. Just a quick preview, see if that's changed at all as far as expectations. Okay, still looking at about, okay, we did see an uptick. So if you guys remember, this was at about 8,000 yesterday. It looks like we've been revised up here overnight, looking for an employment gain of 10,000 tomorrow night. Unemployment widely expected to uptick from 5.7 to 5.8%. That's tomorrow night. So long story short, staying constructive on the Aussie while above 75.45. Initial support 75.90. A breach above 76.44, and the targets are pretty clear. Your initial level of resistance that you'd be looking for would be this pivot right here. You're basically looking at this swing high, which would take you to 76.77, 76.87, completes an exact 786 retracement of the entire decline. All right. Any questions on the Aussie before we move off? So the dollar crosses are going to be in focus pretty much for the entire week, but we do have, like I said, those Fed speakers, Beige Book tomorrow, Aussie employment tomorrow. Then Friday's really where all the fireworks happens for the dollar crosses, guys. You have CPI and retail sales for the United States. And with where the Fed sits, I think those are going to be two important prints that they're going to be closely eyeing later in the week. Okay, so that is Aussie dollar. We got the break of the weekly opening range. Continue to look on that one. Dollar CAD is where I was operating on yesterday. A little frustrating. We had a really good trade on it. I did have 1 quarter of the trade left on overnight. I literally got stopped out like at the highs. Here's what dollar CAD looks like. First on the daily, and then we'll jump into the 30-minute. So if you guys recall, we were looking at dollar CAD earlier in the week on the Sunday update, and we said, look, we're still looking for, or we're essentially looking for a high early in the week to manifest itself. Let's just take a quick look back. Here's what the update looked like from the 10th. Okay, and here's what the daily chart looked like. So we were heading into this critical resistance range, and we noted that, look, we need to see a close above the high day close at 131.21 to validate the breakout. Your initial targets would be the 50 line, and then major key resistance at 133.12, 133. You got the 200-day moving average in there, and a basic 38.2 of the decline. Yesterday we rallied. I noted in yesterday's piece that we could not close above that 31.21 level. So the risk inherently was for a little bit more of a pullback. If the break was legit, we wanted to see support hold at 30.87. Okay, that was the area of which, if this thing was legit and we did see a break, not only of this triangle formation resistance, but the median line off the low, if it was legit, 30.87 should have held as support. So in overnight trade heading into the Asia session, you got a pretty decent short trigger. So I jumped into that short. Initial targets were 30.87. Took out the majority of the trade there. I literally brought the stop down just a little bit tight. I guess I'll show it to you. Here's what the... Let me just bring up the live account real quick. Okay, so here's what the 5 and 1 minute charts look like last night. I guess let me bring up the 30-minute here too. Okay, so there was that 3087 level. And like I said, that's the area of support I wanted to see hold if this break was going to be legit. Now remember, we're looking for early week highs. We said on Sunday, right? So what ended up happening is you actually got a downside move. It was a perfect scalp from that high day close into initial support at 3087. Brought my stop down just a little too tight. I brought it down just below those lows, but it was enough to get spiked out on this little pop higher before breaking lower. So, you know, can be very frustrating. These are the pitfalls that we fall into when we get really near term with the scalps, but a win's a win. So here was the wick out literally at the high. I stopped out at 12 pips for the rest of that trade, but on that decline, we did book the 35 pip ATR that we were looking for at the lows. And obviously, if we had gotten just 1 pip less on that spike, we'd be closing the rest of them right here at 30.21, which was highlighted on yesterday's piece. So from here, Mike, that's all good and dandy, right? What are we doing from here? From here, guys, I do think that you risk a little bit more of a setback. The idea for me is for a move back down towards 29.50, trendline support to get possibly in on a long position later this week. The only thing that would get me really interested in getting back on the long would be if we close back above the weekly opening range here. The weekly open here at 30.50. And if that happens, you're simply going to look to play the weekly opening range, meaning a topside break, you're going to look at those continuation to 31.88 and 32.18. A downside break, I'd be interested in playing the shorts into 29.50, 29.49. So from here, I'm flat. Don't have anything going on here on the dollar CAD as of yet. Again, you are at a near-term support. If I just zoom this out for you real quick, this is just basic trendline resistance, okay, off the highs from June. And it's a basic 38.2 retracement from the advance off last week's low. Okay, so look for the U.S. Open here to give you a tell. If we push deeper, remember, this is an objective break of the initial weekly opening range. Look to play those downside targets. Again, start to sum that up, start to kind of wrap that up into 29.49, where you're likely to see a little bit more of a key support for dollar CAD. Any questions on dollar CAD? A quick reminder, tomorrow obviously is the Bank of Canada interest rate decision, widely expected to hold rates at 0.5%. Obviously, the commentary in the monetary policy report accompanied with the release is really where you'll have the biggest impact, not necessarily the interest rate itself. Mir says, what exactly did you get into, or when exactly did you get into the trade for dollar CAD? Where was your initial stop? Oh, the dollar CAD trade was pretty simple. The stop was against the highs there, Mir. So if you look, the entry here, you had literally a 15 pip stop, a 20 pip stop. I think it was literally 18 pips what I set yesterday. And you're looking for 35. So right off the bat, you're working with a risk-reward ratio that's in line with our strategy. On the initial move lower, and then I guess this is a good drill just to kind of walk you through it, guys. So you're probably wondering, what are all the exits for here? On this type of a trade where I'm trying to fade a rally, right, that has seemingly broke resistance. We talked about this region. This was the major region we needed to clear, but we couldn't close above the high day close. So for me, I'm looking for just an exhaustion pullback. So it's a fool's errand, Mir, to try to call a high on a rally. But when you see that momentum is turning over on the rally here, 60 resistance and momentum on the 5-minute, again, lower than 60, really slight divergence in price action as well. Price action made a higher high, the oscillator, slightly lower high, and then you got a trigger break. So for me, this was a very, very clear trade. Stop against the highs, looking for 35 pips. On the way down here, as you're heading into 40, I don't know that 40 is going to hold. I don't know that it's going to break. It might just be 40, 60 range bound. So I start to shave off a little bit off the trade. Okay, stops are still against the highs. On a move like this, I'm very weary and I start just to chip off the trade. As soon as we start to get into deeper support targets, and namely that 30.87, then I bring my stop to break even or better. On this trade, because again, remember, if this was going to hold as support, I was looking for this thing continue higher, right? If we said if 3087 didn't hold, then this is going to be a false break above that key resistance. So for me, shaved off the majority of the trade as this thing got back above 50. Again, took off 3/4 of the trade, left 1/4 on with a stop against that low, and obviously that got spiked out before moving lower. But you kind of get the picture, right? Risk management is paramount, guys, and especially near-term trading. Also keep in mind, Mir, that we're, I don't want to suggest this to anyone here in the room, but for my part, on the near-term trading, I'm typically losing a lot more leverage, right? A lot more aggressive. Certainly not scalping 35 pips for a mini lot or a micro lot. So you got to be mindful of that trade. And for me, most of the exits that you're seeing here are not necessarily me taking profit at a key level, but reducing and adjusting my leverage on the trade. As the momentum starts to materialize and we start to see price action sort of go through our levels, I want to just reduce the amount of leverage, reduce the amount of weight I have on the trade, right? Because at the end of the day, Mir, if this thing had held this and rallied higher, I would have gotten stopped out at that 12.5 pip, profit happily, as this thing rallies through the highs, right? Because I'm short. So you got to be a little bit more careful when trying to call these turns. And again, sometimes being a little too prudent can hurt you. But long story short, hope that answers your question, Mir. He says, thanks. You're more than welcome. Any questions on dollar CAD before we move off? We are making good time today. So from my part, I'm still looking for a move lower here to be able to get back on the long side for dollar CAD. Again, BOC on tap tomorrow morning. Next, from last night, we had good old euro dollar. So this is also a quick lesson we can talk about. So for the euro dollar, I was also involved in this last night. Again, I took a break-even stop on this as well. I was doing a synthetic hedge, and I don't want anyone to get too excited with these kinds of concepts because they can really make a mess of things if you're not comfortable with them. But for the euro, this is what the chart looked like last night. And we talked about the fact that it was really 111.08 that was the bearish invalidation level, meaning as long as we held below that, you kind of want to be looking lower in the euro. An overnight trade after we made this post, the euro did rally towards channel resistance. And for me, that was an opportunity to hedge my dollar CAD position. So I took a short on euro dollar off of that channel resistance. Remember, short euro dollar, short dollar CAD is essentially, one of them is long the dollar, one of them is short the dollar. Okay, and the idea was if dollar CAD got stopped out on a rip higher here, the euro dollar downside should more than prevail and keep the trade, keep the flow alive basically. So what ended up happening is obviously you got that one spike that took us out of dollar CAD, and I literally got break even on euro dollar as well. Here's what that looks like. And it's kind of a good thing that we did on euro. Here's what it looks like on the 30-minute. Okay, so you saw that break. Here's where we took the short. Okay, an overnight trade. Came back a little bit. I took a little bit off before we went to sleep as we shaved off the lows there on dollar CAD. And then, again, on the rip higher, we took the break-even stop as dollar CAD turned lower. So a synthetic hedge that would have worked out pretty well had the dollar CAD stop been that 1 or 2 pips higher. Would have worked out pretty well without stopping us out of that trade. But long story short, from here on the euro, you've tested former channel resistance as support. And for me, this is something interesting as well. I'm going to take a more benign approach on the euro heading into the US trade session today, just because of where we are both on the daily chart and the 30-minute chart. Remember, basic channel resistance, break, offered support, move higher. What I'm looking at is whether today closes above or below that bearish invalidation that we noted yesterday at 111.08, 111.07. Okay, here's the monthly open that you see here in purple, these dots, and then the 1618 comes in at 111.08. So we surged through that today, pull back lower. I do think euro tries to push higher before we turn over. But if we close above this region, guys, I'm not really interested in playing the short side for euro dollar. You might see a rally right back into the median line. That could take you as high as 111.50 before all is said and done. So what's interesting for the euro is that, Horace, what do you mean by that? Euro GDP? Oh, I think you mean euro British pound. Yeah, we'll take a look at that. Let me write that down real quick. If you take a look at the daily chart for the euro, it's actually pretty clean as far as structure is concerned. It's just that near-term price action is getting cloudy here as we open up the month. Don't really have a very clean monthly opening range. The only thing that gave us clear conviction on the euro was last week. If you guys remember this day, on the 5th, an outside day reversal off of a critical resistance confluence really shifted my focus lower. So at this point, if you bring it into a close basis, you can see that the 50 line has offered a really nice pivot support, right? And it leaves this thing vulnerable for a possible rally back up to 1150. So I don't really want to touch it right now. But just to put things in perspective on where we are in trend, you're still hovering on a break below this larger formation. And, with the test that we made of it as resistance, your focus is still lower while below the median line off the high there. So I think we need to be a little bit more patient on the euro near term. Also for the euro, the only thing I do want to note as far as event risk is concerned, you don't have anything major coming out per se, but you do get Eurozone CPI figures. The final June read comes out on Friday as well, just ahead of the US CPI figures. So keep that in mind for the Eurozone. Any questions on euro dollar from here? Wish we had a little bit more conviction on this one for now, but momentum looks pretty constructive. You broke above, basic channel resistance, tested it as support, moving higher. Possible rally towards 111.50, 111.60 would be an area of which start to look for resistance again on euro dollar. Questions on euro? Okay. So that is euro dollar, dollar CAD, Aussie dollar. I just want to touch base on euro yen. We're coming off of a massively critical region. You might have seen this yesterday on SB Squawk. Here's what the trade looked like yesterday, guys. And the only thing I noted before hitting the sack last night was this 113.33. Really nice region of a swing low from last week. Also, the exact 50 line of this proposed fork. Now, to be fair, we don't have much conviction on this fork being in play just yet, right? We hadn't seen too many pivots of it, off it rather. The only thing that I was paying attention to was the fact that the slope caught the ascent off of last week's low, essentially, last week's Friday low, pretty nicely. And then the 50 line almost to the pip on that pullback with confluence support or that swing low from previous in the month. So for euro yen at this point, with what we're seeing in the euro and obviously the yen weakness that we talked about earlier in the session, it kept the focus higher in euro yen. Okay, and the initial targets on this rebound was the monthly open, 115.38, and a longer dated 50% retracement at 115.61. All of those have been taken out at this point ahead of schedule, and euro yen is now tempting or flirting with a break above the actual median line of the entire formation. So the question is here, how do we get on the long side for euro yen if this indeed is going to materialize into a much more substantiated breakout? A quick look at the daily chart certainly gives us conviction, or it gives us at least pause for this being the potential for being a much more substantiated rally. I'll take you back to the lows that we made for euro yen back in October of 2000. The high that we made, okay, post-crisis 2008, and the subsequent low that we made in 2012, look where the lower median line parallel comes in, right at that low. Okay. Also note some clear momentum divergence. Price action making a lower low on a closed basis. The oscillator, even if it's not making a lower low, holding those lows, again suggesting near-term divergence. Okay, so you're now trying to push through 50 here on the momentum signature. Watch that on today's close. Not too excited about chasing this above from here. By the way, this is a long-dated 618 retracement from the advance off the lows you made in 2012. Now near-term resistance. And we'll look to see if we can't pop through this on a closed basis. But broadly speaking, again, the potential here for a much more substantiated bottoming process near term for Euro Yen. The only other thing I wanted to note, guys, is remember the the gap strategies that we talked about post Brexit, and how these gap fills can oftentimes give you a much more broader sense of near-term directional bias. And what I mean by that is, here's the gap that you made on Brexit, right? That next following subsequent Monday, you saw that the market filled or tried to fill that, failed. We filled the gap, moved lower. That was the range, the gap fill. Now that gap fill range has been broken to the upside, and that in and of itself is a near-term constructive development. Okay, so again, you fill the gap, you look to make a range low. If we had come back up and the gap fill high had been sort of acting as resistance, you'd know to continue to watch that range for the break. But this development, and certainly if it closes here today, would certainly shift the focus back to the upside a little bit more aggressively for Euro Yen. Keep in mind, again, from a, if you want to call it a fundamental factor, the re-election or the reappointment of Abe does keep into account Abenomics and the whole concept of continuing yen weakness to stoke the economy. And that's one of the reasons that you're seeing the yen weakness pretty much be paramount across the board. In fact, if you bring up just the relative performance that you're seeing against the yen, okay, here's what that looks like. And this is just on today's session, guys. The yen is weaker against all its major counterparts. The biggest winner is actually the Aussie, up 2.65%. British pound, up 2.5%. Same thing on the Kiwi dollar, or the Kiwi yen, all with a gain of more than 2% so far in the session. So that yen weakness really being stoked by the fact that you have expected continued policy from Abe. So, Mike, that's all good and dandy. Once again, where do we go from here? So, the game plan for this would be for a pullback to offer you a little bit more of a conviction long scalp. Some areas of interest that I'm looking for as possible near-term support are A, last week's high, right around this region. That gives you 114.80. This is the 630 high. Okay. More importantly, this region. Basic 50 line, which we caught support at already last night. And these are two regions which, if we get a pullback, I'd be interested in possibly looking for some long triggers, long entries on inevitable stretch into my favorite zones. And for those of you who have been with me for a while know this. This is going to be the sweet spot here for initial topside, 117.04 into 117.12. My favorite Fibonacci confluences, you have an exact 100% extension from the advance off the lows and an exact 618 retracement from the decline off of the highs. These confluence regions can sometimes be, real critical areas of resistance and support for price. So we'll go ahead and remove these just for argument's sake. We're already taking those targets out. Look for some near-term support near 114.80, 114. And again, inevitably looking for long entries on a stretch into this key region of resistance. Keep in mind, Euro Yen, much larger ATR, okay, than our typical scalp. In fact, let's take a quick look at what the ATR is on this right now. Oops. Oop, I got to add the subscription. Hold on one sec, guys. Okay, so a quarter of the daily ATR is still giving you about 60 pips. Okay, so keep that in mind here on the euro yen. Still looks pretty constructive from a momentum standpoint, so I'm not going to want to try to fade it. Rather, I'll be looking to see if we do get a pullback to offer some long entries on euro yen. Okay, last but not least, I'm going to jump into your question there in just a moment, Horace, on euro pound. Before we do, I just want to touch real quick on crude and the gold trade, both of which we've been following rather closely on the radar charts. Here's what they look like. Or here's at least what crude looked like earlier in the week. You know, we talked about this region at 44.68. That was the 100% extension from the decline, but also the 50 line for the longer term descending pitchfork here in crude. We probed below it yesterday, and we even snuck a little there, or snuck just below it to make a close. But here's the reversal, and this is your classic sort of commodity false break to get everyone faked out of the trade. Excuse me. So you did close just below it. The actual concerted close last night was, or yesterday was 44.47. We were looking for a hold around 44.68. Here's the rebound coming right back up to check former support, now resistance at the May open. That's 45.98. Okay, so as far as the crude trade's concerned, your focus right now is on this near term region. Okay, if you do see a topside break, remember the bearish invalidation level still with the monthly open. That's 48.40. So as long as we stay below the monthly open, the broader outlook here remains bearish. On a downside break, again, your targets 100-day moving average 43.50, and then key support here at 41.10, 41.86. So no change to any of the levels or the outlook here for crude. But if we do see this break above 45.99, 46 essentially, guys, expect a little bit more of a recovery. You see momentum has continued to hold 40 as support here on a daily basis. It does suggest that the downside, or at least the immediate downside pressure may be waning. All right, so keep your eye on that crude trade. And again, the implications for dollar CAD are also pretty paramount here. If we do see the dollar, or if we do see crude start to rally a little bit more, look for dollar CAD to remain pretty well, or look for the loonie rather to remain well supported. Some further downside pressure on dollar CAD. The other commodity trade is gold, and gold looks like this on the daily chart. I really don't have a play per se here. The only thing I wanted to point out is that you're likely to get a little bit more of a pullback. The gold trade remains broadly constructive, but you are hitting a major resistance barrier. This is basic trendline resistance off the record all-time highs that we made in 2011. You had a 618 extension from the ascent off the lows. You spent a couple of days up there, but couldn't close the week in that region or above that region. Here's the pullback. Again, for me, near-term support at the monthly open. It's 1321. A break below 1303 would be needed to invalidate the long bias. So I think there's some further downside pressure you could see here in gold. You look to stay constructive, broadly speaking, while above 1303. And once you clear 1380, I think you're going to get a lot more room. There is room to spread this legs here, okay? You got basic channel resistance or trendline resistance that takes you into like 1408. More importantly, that 1433 target to the upside. A little trigger there as far as support's concerned. Any questions on gold? Okay, so that crosses off all the pairs and assets on my list. I do want to go through your questions. Hey, Amir says, hi, everyone. Sorry, a bit late. If you didn't cover sterling yen, can you possibly have a look into it? Where does it go from here? And if 33.40 is now acting as support. Okay, so let's do this, Amir. I haven't covered it yet, but we're definitely going to do that. I want to go over euro pound here for Horace, and then we'll take a look at pound yen. So, Horace, euro pound looks like this, my man. Okay, let's see what we're working with here. That's interesting. So that's a pretty big region of resistance right there. 87.09 is going to be a basic 618 retracement from the ascent off the highs that he made in 2008. But it's also slope resistance. So if we take this basic slope off of the highs that he made in early 2009 and late 2009, if you take that same slope, you can see that that gradient has offered some really nice pivots in price, right? Here's the slope extending off the high from 2011. You saw it catch the high in late 2013. It was also the pivot break or the origin of the breakout that we got just post Brexit here. This was a big region. 50% retracement. You had that slope line. You had the upper parallel for the current or the former operative structure here. And the break led to a substantiated break to the upside in the pair. So giving you further conviction on the use of this slope. Now, if we extend that same slope to the record high, converges right in that 618, and that's at 87.10. Near-term support, I would still fit at 83.70. Sorry, a little tongue twisted today. And there's a couple of reasons for that. Well, let me take that back. I would say 83.15 to 83.70. You have the monthly open right here, Horace, and then you have the 50% retracement, both of which would need or would necessitate a break back below former slope resistance. So for me, this is going to be the bullish invalidation level. As long as slope or price stays above 83.40, I do like this thing on an extended approach into 87.09. Very interesting price action. Bear with me just one sec, guys. This is going to look ugly. I just want to see what it looks like. Okay, nothing I'm going to stress right now, but yeah, I'd be looking for that setback into this region for possible long exposure. Remember, this could be a breakaway gap. It's not a necessity that we go ahead and fill that gap, but to fill that gap, if this thing was going to, a break below that 83.50 level would certainly leave targets down at the close here, and that close was 83.30. So the propensity of this thing to see a much more substantiated drop opens up if we get below this. I don't think we do. Near term, that's what I'd be looking for as a little bit more of the initial support here for euro pound. Horace, does that help? Do you have any specific questions on it? He says, thanks. You're more than welcome, man. It's a very interesting pair. Remember with this one, if you're going to scalp it on a near-term trading strategy, it's a much, obviously you're working with pound pips here, right? So a little bit heftier of a trade. So just keep that in mind as far as your profit targets on this pair. And momentum looks still pretty bearish there. You got a rejection off of 15 overnight. You could see this trigger materialize into a near-term rebound, but again, the risk does remain lower while below the weekly open. You'd have to clear 85.26 here to get back on the constructive side, targeting 87.09. All right, so that's euro pound. Okay. I guess that goes along with the next question here, Graham, for Amir. So Amir wants to take a look at pound yen, and Graham has a comment here on just general speaking here for the yen. He says, Mike, I'm thinking out loud, but if you believe there is a fundamental reason for yen weakness, then should also believe in short-term pound strength with the new UK Prime Minister May. So go long pound yen with a 400 pip ATR. Look, I love where pound yen reversed off of. There's no lying on that. I do think that near term, you're right at resistance, like right now, Graham. Same thing, Amir. And the reason I do think that A is because you're testing the monthly open. Here's pound yen. The monthly open comes in right here at 137.30 essentially. And former trendline support, former channel support, whatever you want to call it, now resistance, extending off that low that you made back in February. That's right here as well. So I think near term you want to be cautious about liking the long side from here, at least on a near term, um, resistance level, or a near term strategy rather. Graham says, yeah, resistance exactly, right, Graham? We're right there. So I'm a little bit cautious of favoring the long side from here. But to go back to your comment, I wouldn't necessarily assert it like that. And here's the difference, Graham, and this is just me, just my humble opinion. Um, we know what we're getting with Abenomics. We know what his stance is. We know what the central bank's sort of game plan, as it were, has been for the last couple of years. They've continue to assert that they do not want dramatic changes in the yen, whether it's appreciation or depreciation. Remember, the BOJ's major fight has been the sharpness and the veracity of the move. Obviously, a weaker yen is going to be beneficial for the export-driven economy, so that's going to be something that should stoke inflation. Remember, that's one of the main things these central banks are trying to do right now. But the difference and the distinguishing feature between that and what's happening in the UK is, yes, we do have a new prime minister. We know who it's going to be. We know when she's taking office, but we don't still necessarily know what's that going to look like. Whether it's going to be the trade deals that are renegotiated with the UK, or where the UK stands on the global platform as far as trade. So that's the one caveat, Graham. With the BOJ and with the Abenomics, we've had a precedent set over the last couple of years where we know now that he's still in power, it's going to be a continuation of that game plan. The UK, maybe not so much. That being said, Graham, and putting that on the table for you just from a fundamental side, I like the pound long yen as well, or the pound long as well, to put it in easier terms. And I'll go over the pound in just a moment. But for pound yen, I don't have anything on the near term that's really worth getting too involved in on a scalp basis. But I would tell you that, again, watch this near term resistance, watch the monthly open. If we do pop through, your initial sort of gauge would be a basic retracement off the high from Brexit. And in fact, bear with me one moment. I just want to see if this bears any fruit. Huh. Well, that's interesting. So if you take a pitchfork just off the low that you made, excuse me, on the 27th of June, the subsequent high on the 29th, and the low that we made last week, decent pivot on the median line, nothing major, but look where the 50 line converges on the monthly open. Boom. Still near-term resistance. Any way you slice it. Okay. So this is where I'd be looking at. Amir says, are we at resistance now? Yeah, Amir, I would have us at near-term resistance, basically whereabouts we are right now. The monthly open. Okay, so 137.20. Let me get you the exact level. The monthly open comes in at 137.29. Okay, so yeah, I would have us at near-term resistance right now. Not to justify a short per se, because I do think that you're putting in a near-term low here, but the immediate risk is definitely for a pullback off this region. Now, just for argument's sake, guys, if we go back to the 30-minute chart, and I say it with caution, but I do want to just let you know there's nothing wrong with counter trend trading as long as you stay nimble. Okay, it's not the time to press your leverage excessively. It's not the time to sort of sit in the trade and look for the bigger move. This is where you want to be a lot more nimble in and out. But just to put things in perspective, here's it. Yo, there we go. Here's a near-term trigger in momentum, right? So let's say that the US market opens, you get a spike through this region, fails to hold, you get a downside momentum break on building divergence, which is already starting to materialize. You could get a short scalp against the high here for sure. It's a larger range ATR trade. There is room. In such a scenario, my first instinct or my first gut would be just to tack on a quick retracement. Again, we can't do this now because we don't know that we've set a near-term concerted high. But should we do that in the US trade session today, this would be the first thing I'd be looking at, and then targeting a basic 233, 236, 38.2 sort of targets like that. Um, in the event that we do put in a near-term peak here on building divergence and a trigger break, your first target to the downside would be somewhere in the range of 35.23. I would be looking for last week's open, okay, as a soft target at 35.80. But 35.23 would be the first just basic retracement of the advance. Now, obviously, all these retracement levels change if we do press into a new high, but that's sort of how I would be looking to play a near-term pullback. Remember, inevitably, more favoring looking for the pullback to give you an opportunity to get back on the long side. Make sense? Amir says, yeah, awesome. Okay, great. So that is pound yen. Certainly a pretty popular pair. The dragon's going to be more and more popular as we continue to get this volatility and the possible upside slope in the pound. Here's what pound dollar looks like. And while we haven't seen crazy evidence of the reversal, certainly a couple of things are starting to come to light that are suggesting that this thing does want to see a little bit more of a pop. So I'll take you back to the daily chart. I know all of you have seen this before. We've talked about this at length, the level and the sort of region of which the pound turned from. Absolutely paramount. This is a trendline support that dates back to 1985. You had a longer dated 786 retracement, which caught the lows, some basic slope and channel support that caught the lows, and the rally now checking former channel support as resistance, and those lows from last month also as resistance. I'm going to be very mindful of today's close. Okay, if we're able to close above this median line, look for a rally into the monthly open. Also keep in mind the divergences that we're seeing. Pound yen at the monthly open. Pound dollar shy of the monthly open. Okay, so something to take note of there. And really a breach above, in my humble opinion, a breach above 133 would be needed to sort of validate a little bit more of a reversal trade for pound dollar. The only thing, let me take a step back. The reason I would prefer playing pound yen, guys, and we'll take a look at, or even euro pound, but the reason I'd prefer playing a mere pound yen is just because I do like the, the short yen story as opposed to short dollar. The short dollar story for me would be very comfortable if we finally cleared the monthly opening range to the downside, or if we get a downside break below 11,965 on the index. If that were to happen, you were to see broad dollar weakness start to take shape, then yeah, I think pound dollar is going to be a beautiful trade. But if you're taking each trade on its own merits, I do think that you have a little bit more opportunity, and obviously also a much wider range on pound yen. So a quick tidbit there on where pound dollar stands. Any questions specifically on the pound dollar? I don't have any crazy near-term structure to get me excited on this one either yet. Okay, could be in play. In fact, let me tack on a quick extension here. Oh, that's interesting. All right. Actually, look for near-term support right around here. Look for near-term resistance right around here. Actually, the next resistance target, again, like I said, would be that bearish invalidation at 133. That would take you up into this region. So some near-term targets there for the British pound. Hope that helps. Okay, Aussie CAD seems to be losing momentum, says Mir. Is it time for a short? Let's take a quick look at Aussie CAD. Haven't taken a look at it recently, to be honest with you. Let's see what's going on. Okay. Couple things I'll note here. Just looking at it for the first time in quite some time. A, I'm not a big fan of shorting things that are in overbought condition on a daily basis. Okay. B, I don't necessarily have any major key resistance zones that we're coming into yet. Even if you choke that 786 retracement or that into a 764, which we went over this yesterday in the webinar, guys. A lot of times you can use both of them as targets. 764 is simply 1 minus 236, right? The 786 is the actual fib ratio. That being said, I don't know if I would be trying to fade this one. I think on the near term, yeah, you could probably get away with just a pullback, but I don't like trading it unless it's coming off of either a key resistance level or you're seeing a pretty convincing momentum trigger. I don't think you're getting that on either right now. So, Mir, I'd be careful about getting too aggressive on an Aussie CAD short from here. I do think you're at risk, but it's not just about knowing the direction of the immediate bias, right? It's about having a setup, something that you can place a little bit more of stock into. Let's see what the 30-minute looks like. Okay, we can get rid of that. Yeah, it's ugly any way you look at it. Ugly any way you look at it. Yeah, in general, guys, it's pretty hard to scalp these one-way directional breakouts on a trade like this. Mir, to be completely frank with you, I don't even want to mess with it. I'd be looking for a stretch into 99.70 essentially for a possible peak there. Even with that, I would still need to see momentum turn back sub 70 before I start shorting it. And for as far as long exposure is concerned, you have nowhere to put a conviction stop unless you get back into basic trendline support, essentially the monthly open down here, which is like 96.20. So I would keep this one on the radar here, Mir. I wouldn't really get too aggressive on operating on this on a near-term approach just yet. We are up on time. David, I do want to go over Kiwi dollar. I'm not going to leave you hanging, man. Look, same thing here. This thing is off the fritz. We've been talking about this for the last couple of weeks, if you remember, on the updates for the intraday charts. But I'm completely clueless out here. I'm going to be honest as I can with you guys. I don't see a play for us on the near term chart. If anything, I just think this thing has set a pretty decent weekly opening range. Here's your weekly opening range high, your weekly opening range low, completed a basic 38.2. We're failing again at the highs here to move down. You know, this thing, while still broadly within this structure, I do think is getting tired. Now, the only thing that's getting me really frustrated is that you're not getting sort of that reversal off the highs. Every time you get this snapback, price completely pushes into a fresh high. And that's just not a very super convincing thing for me to be working with. So I think at this point, look for the weekly opening range break to give you a tell. Obviously, the broader trade still remains constructive in my eyes, while above like 71.50, basically the lows that you made back here, that key 618 retracement. It would necessitate a break back below channel resistance. So broadly, while above this region, I think it needs to be constructive. But from a near-term approach, I wouldn't touch it, Dave. I'd be looking, I'd be looking elsewhere. If anything, a trade maybe like Kiwi Yen might be something I'll be interested in. This has cleared its monthly open. It has cleared its monthly opening range high. If we take just a basic sort of gauge here, some things to keep in note for the Kiwi Yen trade. Well, that already broke, even better. Okay, and it's actually pretty darn clean. There's the 50 line right there, catching the highs. And if we take just one more, bear with me one more sec, if we take just a basic retracement of the Brexit move in and of itself, just want to see if that 88.6 catches the highs. Nah, I don't think it will. Oops. Okay. Okay. So constructive above 74.45. The actual stretch high from Brexit comes right here. Comes right here at 77.68. Not bad. Thanks for bringing this up. Well, I guess I brought it up since the Kiwi dollar didn't work out, but yeah, that's definitely sparking my interest here. Another wider range ATR that does give you some pretty meaty moves. So I'd like to stay constructive above 74.45, basically the 50 line. Bullish invalidation for the broader uptrend would need to be here. That's the weekly open and monthly opens with an inevitable topside target somewhere. Basically, you're looking for the first initial region of resistance to be at that, Brexit swing high. Not bad. Not bad. Hope that helps me. You're more than welcome, man. I appreciate that. All right, guys, we'll wrap things up here. We'll be back on tomorrow morning, as usual, 8:30 Eastern for another intraday webinar. Keep in mind also tomorrow's midweek strategy webinar with Jamie at what is it at 1 p.m. I'm going to check with him because we do get the release of um, the beige book tomorrow. So I don't think he'll necessarily want to stray away from that, but we'll keep you updated on Squawk if we do move that time. Brian saying, hey, Mike, how are you getting the weekly, yearly levels on TradingView? Thanks. Brian, you can download an app, man. It's a free indicator. It's from Chris Moody. Okay, it's called High, Low, Open, Close, Dash, Weekly, Daily, Weekly, and Monthly. This allows you to plot not necessarily the highs and lows, but I have it set to plot the monthly and weekly opens. So the purple lines that you'll see on my chart will always be the monthly opens. The gray sort of dots will always be the weekly opens. And this way, right off the bat, you could just go back in your charts and kind of see where the major key levels that the market has opened each session on a monthly and weekly basis. So hope that helps. Brian, just do a quick search for that, code plots, and I will see you all bright and early tomorrow morning. Best of luck trading. Cheers.